Hi there, welcome. Thanks for joining me on this recap of important FAFSA changes to both process and eligibility that I really think is important for counselors to know as we're advising rising seniors and thinking about how to prepare to support families this coming fall with changes in FAFSA. As everyone is aware, the new FAFSA will be available for financial aid year 24-25, which means that our rising seniors, the class of 2024, will be using the new FAFSA. It's a result of two acts of Congress. The first, the Future Act, passed in 2019, that really focused on enabling process changes, as well as the FAFSA Simplification Act of 2020, which focused on eligibility changes. Both of these acts of Congress come together to create the new FAFSA, which is meant to increase student applications as well as eligibility primarily for federal student aid. First, a quick review of the key changes to FAFSA. The terminology expected family contribution, known as EFC, is going away. It's going to be replaced by Student Aid Index, or SAI. This is still going to be a number that's delivered at the end of the application process, which is a calculated family's ability to pay for college. The number of questions is going to be significantly reduced from over 100 down to 36. This will be enabled because all income information will be transferred directly from the IRS to the FAFSA form. The new application process hasn't been discussed extensively, but I think it's really important because it has implications for how we will support students and families to complete the FAFSA. The first major change is that FAFSA will be roles-based, which means that a student will initiate their FAFSA, complete the student section, but not see the entire FAFSA application. Once they're finished with their questions, they will then invite the parent to complete the parent portion of the FAFSA. That parent will only see the parent side, which would be the parent-related questions, and be able to sign their portion of the application. What this means is there'll be no longer a single view of the FAFSA where one individual, whether it's the student taking the lead or the parent taking the lead, can complete the entire application and only require electronic signature from the other contributor. And this will have implications for how we support students, especially those students who generally take the lead in their application process. Additionally, the FAFSA will have to be completed within 45 days of when the application is started. The student has started the application and sent an invitation to the parent, but the parent doesn't complete their portion within 45 days, that application will be deleted and the student will have to start over. The new FAFSA will require every contributor to have an FSA ID. This means both students and parents will have to have an ID in order to participate and complete the application. In current cases where a parent may not have a social security number because they don't have status in the US or may live outside the US, parents are able to enter zeros and the student parent can print out the FAFSA for signature. This will no longer be the case. If a parent or student doesn't have a social security number, they will have to use a third-party service in order to verify their identity and create an FSA ID. All FSA IDs will also have multi-factor verification. Because all income information will come directly from tax forms transferred from the IRS, every contributor must consent for the IRS to share that data with Department of Education. And without consent, if the student or parent are tax filers, the FAFSA will not be processed and the student will not be eligible for federal aid. It's still undetermined what the path will be for contributors who don't file US tax returns, which may be parents who are ineligible because of their status or because they don't live in the US. There are significant changes for parents who are divorced and separated when it comes to FAFSA completion. Probably the most significant change is that parents can no longer be informally separated and allow for only the custodial parent or a single parent to fill out that FAFSA application. Parents must either be divorced or legally separated in order to qualify for a single parent to fill out the application. If parents are only informally separated, then both the parents will have to complete the FAFSA. And there are some states where legal separation isn't possible. Both parents will be completing the FAFSA. There's also a change in the definition of who is the custodial parent. Currently, it's the parent with whom the student lives most the year prior to application. That'll be changing to the parent who provides greater portion of students' financial support in that prior year. FAFSA will be getting rid of questions regarding dependents and children on the application and will instead determine family size by the number of dependents claimed on tax forms in the prior year. Now, because this information is being collected on the back end through the tax form, the number and family will not be displayed in the electronic application. So it'll be important for students and parents to refer to their tax form to understand the number of dependents claimed. And if there are more dependents living in the household at the time of application, they would want to update that information on the FAFSA. As counselors, this new process is going to be challenging, particularly for students who have different living arrangements. We have students living with parents that are informally separated. We need to help students and parents understand that because they are only informally separated, both parents will have to complete the FAFSA, or give parents the opportunity to file for legal separation or divorce prior to FAFSA completion. When students are living with relatives other than their parents, it can be challenging for students to coordinate with parents to complete the parent portion of the FAFSA. And students living in multi-generational households may have a different number of dependents that are actually being supported by parents versus what's reported on the tax form. So as we're planning for FAFSA completion workshops and events, getting this information to students and parents ahead of time, making sure they have FSA IDs, and understand that each contributor will only see their part of the application will be critical to success of these events. Now I want to turn to questions around calculation of the student aid index and Pell Grant eligibility. In the first step, students will be eligible for the maximum Pell Grant and a zero SAI based on parent income, depending on the parent household and marital status. The second step will be a calculated Pell Grant based off the student aid index calculation. The final step would be eligibility for a minimum Pell Grant, again, depending on the parent income and household size. Based on this table, you can see a student living with a single parent and 2 total in the household would be eligible for the maximum Pell Grant if that parent's adjusted gross income is less than $41,198. Similarly, a student with married parents and a total of 4 in the household would be eligible for the maximum Pell Grant if the parents' combined AGI is less than $48,563. Students that meet these criteria will receive that maximum Pell Grant, which is proposed for financial aid year 24-25 to be $8,215, and an automatic zero student aid index. The full calculation of student aid index will occur in the background, so it is possible that a student could receive a student aid index as low as $1,500. And students whose parents aren't required to file taxes because their adjusted gross income is below the threshold to file for federal taxes will receive an automatic student aid index of negative $1,500 in the maximum Pell Grant. If the student doesn't qualify for the maximum Pell Grant and their student aid index is lower than that maximum Pell Grant, then it would be subtracted from that number to come up with their Pell Grant eligibility. So in the case here where students' student aid index was $2,375, that's subtracted from the $8,215 maximum Pell Grant to show that the student is eligible for a Pell Grant equal to $5,840. Even in the case that a student's student aid index is greater than the maximum Pell Grant, they still have the opportunity to receive a minimum Pell Grant, which is calculated at 10% of the maximum Pell Grant in a given year. This eligibility is also based off of the parent marital status, the number in household, and the parent's adjusted gross income relative to a chart, which is a multiple of the poverty line. Now, in order to understand changes in the calculation for family's ability to pay, now called student aid index, I'd like to review the overall framework on how student aid index is built. We have inputs from the FAFSA of parent income and parent assets, as well as student income and student assets. There are certain allowances that are computed for parent income and assets and student income, which come up with an available amount to pay for college. And from that available amount, there's an expected contribution rate. For parents, the contribution rate can be up to 47% of available parent income. For parent assets, the contribution rate can be up to 5.64%. From available student income, the contribution rate is 50%. And from available student assets, the contribution rate is 20%. You could see there is a pretty sizable deduction or allowance for student income, whereas for student assets, there are no allowances or deductions. And in fact, the student aid index formula remains unchanged for anything related to student assets. Because all income information will now be obtained from federal tax forms directly transferred from the IRS, there'll no longer be any questions about parent untaxed income or additional income, which does lead to simplification of the process. The current FAFSA looks at both taxed and untaxed income and allows for certain deductions. This includes federal income taxes paid, Social Security and Medicare taxes paid. There is an allowance for state tax burden, depending on the state a student and parent lives in, as well as income protection allowance based on the size of household or family, and employment expense allowance. Once these allowances are deducted from taxed and untaxed income, we come up with available income to pay for college. Going forward, all income will be taken from the tax returns, which is primarily taxed income. But we do have some changes in allowances, which include the elimination of a state tax allowance for the state tax burden, but an increase in the income protection allowance. There are three main changes to parent assets for the new FAFSA. The first is that child support received, which is a form of untaxed income, will now be reported as an asset. This is favorable because the contribution rate from asset maxes out at 5.64%, whereas the contribution rate from income, if child support is counted as income, is as high as 47%. Going forward, net worth of business and farm of any size is reported as a parent asset. This is a significant change from the current FAFSA, which allows parents with businesses or farms that employ less than 100 full-time employees to be exempt from reporting the net worth of that business or farm. And this may result in increased burden for small business owners or sole proprietors to come up with the net worth for their business. The third change for parent asset is the exemption from reporting assets. Currently, if a parent's adjusted gross income is less than $50,000, they may be exempt from reporting assets. Now a parent can have an AGI of up to $60,000 and not report assets as long as they meet two other criteria. They either have to receive means-tested federal benefits or not file certain schedules listed below. Of note is they are not able to file a Schedule C with a gain or loss greater than $10,000. And Schedule C is the schedule that sole proprietors and business owners would file. The main changes to student income are the increase in the amount of income that is exempt from the student aid index. So essentially the first $9,410 of income earned and reported on the FAFSA by a student is now counted toward the student aid index. Tax income earned from federal work study or scholarship continues to be excluded. Because forms of untaxed income are no longer reported on the FAFSA, this is favorable for students because currently the FAFSA asks for gifts received by the student to help pay for expenses. This had implications for students who were receiving money or distributions from grandparent 529 plans to help pay for college. And this eliminates this concern because these received amounts are no longer going to be reported. Probably the biggest change that has been discussed is the fact that the new FAFSA will no longer account for the number in college when calculating student aid index. So as a quick and simplified review, currently the expected family contribution is divided by the number of students in college. So the overall family calculation of $20,000 would be divided by 2 students in college, which means the EFC for each student is $10,000. Going forward, it will no longer be the case. So with 2 students in college, the overall family calculation of $20,000 means that the student aid index for each student will equal $20,000. Now, I've run a couple scenarios using the student aid index calculator that I've developed on my website to show the impact of this change for a married couple with 2 in college. With an income AGI of $100,000 and assets of roughly $100,000 as well, the current EFC per student is just over $10,000. The new SAI per student would be nearly $19,000. For income of $150,000 and assets of $200,000, the current EFC per student is just over $21,000. The new SAI per student is going to be over $41,000. And the final example would be a married couple earning roughly $200,000 with $250,000 of assets and 2 in college. The EFC per student is just over $30,000. Now it will be an SAI per student of over $60,000. So this leads to the question, given multiple students in college, will the CSS profile student aid index be more generous? The answer is it depends. It depends if the parents are married or divorced. 75% of CSS profile colleges require both parents to report financials, even in the case of divorce. CSS profile will still collect untaxed income, which may result in a much higher income reported for financial aid purposes. And it will depend if parents are homeowners or not, because many CSS profile colleges look at home equity as a parent asset, or percentage of that home equity as a parent asset, which could outweigh the benefits of the CSS profiles accounting for more than 1 in college at the same time. I did a little investigation using the FAFSA student aid index calculator that I built and the CSS profiles calculator for EFC. I ran a scenario of a married couple with 2 in college that aren't homeowners. For income of $100,000 and assets of $100,000, we can see the FAFSA SAI is nearly $19,000, whereas the CSS profiles SAI is just over $7,000. For income of $150,000 and assets of $200,000, we can see FAFSA's SAI per student is over $41,000. CSS profiles SAI per student is significantly lower at under $15,000. And for married couple with 2 in college, no home, earning about $200,000 with assets of $250,000, the FAFSA SAI per student is under $61,000. CSS profiles SAI per student is just over $24,000. So it seems in certain cases, CSS profile will be much more favorable. I was recently advising a Bay Area family who's pretty high need, married, and doesn't own a home. And in fact, it turned out that because they're having twins go to college next year, they will be shifting their list building toward the CSS profile schools because of the much more favorable treatment with multiple kids in college. The question for us counselors is, as we're counseling rising seniors, could this be a factor for some of our students as well? You can see an overview of the timeline for implementation. Everyone is aware at this point that FAFSA won't be live or released till sometime in December. We still don't have an exact date on when that FAFSA will be released. But in the meantime, we have certain milestones, including Federal Student Aid publishing the Pell Grant lookup tables this month. They'll be launching a better FAFSA preview for families and counselors sometime in July. And in August, they'll have set and announced the process for students or parents who don't have a Social Security number to apply for an FSA ID. Finally, in the fall, they'll be releasing their FAFSA estimator, which will give families and students an estimation of their federal student aid eligibility and their student aid index. But I encourage you to use the student aid index calculator that I built to help families get a much earlier understanding of their eligibility. To sum it all up, here are a few resources that could be helpful for you as you're navigating this process and helping advise students and families. I built a student aid index calculator that you're free to use. It helps families get an idea of what their calculated ability to pay will be, as well as eligibility. I have a counselor resource center where I'll be updating with information and handouts on the new FAFSA. You could also sign up for my counselor newsletter there. Federal Student Aid has created a website on the Better Future, Better FAFSA, as well as National College Attainment Network. If you have any questions, please reach out to me. I'd love to hear from you. You can email me at paul@collegemoneymethod.com. Thanks for joining.